Good afternoon, everybody. Going to go over our Forex trades for today, Wednesday, March 9th. We did have two trades. We finished down 9.5 pips on a size adjusted basis. We'll go over that in a minute. First, just want to talk about the economic news. Really wasn't any economic news to speak about. The little bit that came out of inventories was was low level type stuff. Excuse me. The bigger news was the U.S. dollar, not U.S. dollar, was the Canadian economy. They left interest rates unchanged, but haven't been trading the Canadian dollar in a while unless it's correlated with something, just because of oil's been so volatile. All eyes are on tomorrow, the ECB interest rate decision, which is obviously very big, and the economic calendar has just been very light this week. It's been difficult to trade. So the wholesale inventory numbers that did come out in 24 years, the ratio of wholesale inventories to sales has only been higher than the current 1.35 times once in the past 24 years. As a matter of fact, the automotive inventories rose to 1.78 times sales, the highest since the financial crisis. So things are not very good at all. For some reason, Goldman Sachs increased the first quarter GDP on this jump in inventories, which really makes no sense. I mean, maybe they're thinking businesses have a good sense of their businesses and the outlook, but inventories have been remaining high, and now they've even jumped even more. You could look at it from another point of view. Companies haven't been selling their inventories for the last couple of years, especially the last year, as the economy has just deteriorated during the past year. And yet they refuse to write down the inventories. As a matter of fact, they're increasing the inventories. So they could be completely wrong in their forecasting of future sales and future business activity. Let's hope they're not. But if they are, then when they start to write down these inventories, which a lot of analysts are expecting them to start doing soon, it's going to really negatively impact GDP. But I guess Goldman Sachs is a little bit shorter term view. I mean, the first quarter is almost over, right? At the end of this month. So maybe that's what they're thinking. That's why they bumped it up. They didn't say anything about the second, third, and fourth quarter, or the remainder of 2016. So we'll see. So let's go over the two trades. First one you're looking at here was a long in euro yen, which was a swing trade. We had 10% of our normal size. We got long 125.101, basically top ticked it. I mean, it did go as high as 120, but since we had so little, on a size adjusted basis, this was about 1 pip, So after our commission, we're gonna push on the trade. So we didn't get out, and then consequently, you can see what happened. It turned down, and we got stopped out at 123.899 for a loss of 120.2 pips, or size adjusted 12.1 pips. Second trade was a scalp. Unfortunately, we couldn't take bigger size because we had 30% of our normal size. We couldn't take our normal size on the scalp just because we were risking more than the 30 pips. It was actually in the neighborhood of 45 to 50 pips. So consequently, we were risking, let's call it 13 to 15 pips. Considering the first trade of the euro yen, which were down 12 pips on a size adjusted, we didn't want to go too nuts. So we took 30% of it. Short from pound yen, short from 159.637. About a half an hour after we caught it short, it went to 159.50 and it bounced. We were expecting it to break down more than that. We were looking to cover around 159.30, but this was getting late in the evening. Did this around 11 o'clock at night, maybe around 10 o'clock at night. So before shutting things down for the evening, we threw an offer in there to cover at the 159.550 level, which would just be 5 pips above this bounce, right? And we got hit there, 159.550, picking up 8.7 pips, or size adjusted 2.6. And it did trade as low as 159, about 47 or so. So it did break that 159.50, but then quickly bounced. This was all during the night. Obviously, we weren't watching. But we got out. We got the 8.7 or 2.6 on a size adjusted. So overall, we lost 9.5 pips. Not great, obviously. Not horrible. something we can live with. But it's just been a very slow week with the lack of economic news. Tomorrow we have the ECB, which is big news, but might be too big to trade because we're not going to want to be in a position heading into it. And depending on what they do and say during the press conference, we may not get any trades off tomorrow, at least tomorrow morning. But we have tomorrow night and Friday. So we'll see what happens. So that's it. We're going to wrap it up. If you're still trading now, good luck. If any signals come out, they'll be coming your way. And have a great rest of your day.